This life insurance vehicle gave him income. So for him, that was a great solution. Hello, my name is Ryan Anderson, and welcome to Retirement Fundamentals. This is the location, this is the spot where you can get answers about retirement that you can't find anywhere else. Today, we had a subscriber who wrote in and wanted to know, should I have life insurance after retirement? What a great question. And that opened up a whole Pandora's box of questions. And the answer to that is maybe. Well, isn't that an interesting thing? I am an insurance agent, and I'm saying that you may not need life insurance. It depends on who you are. It depends on the purpose of the insurance. So let's go ahead and take a look at the different types of insurances that are out there, the different solutions that are available, and is this right for you and your particular scenario? So the three most common kinds of insurance out there are pretty straightforward. You have term insurance, which starts at a specific period, ends at a specific period of time, and it's a term of time in the middle of there. And it can be anywhere from 1 year to 30, 40, 50 years, depending on the company and the purpose of that policy. The second kind of insurance is called a whole life insurance, and that is exactly what it sounds like. It is for your whole life. Now, as a general rule, that is a little bit more expensive. And there are people online that'll tell you it's terrible, you should never get it. For some people, it might be a bad idea. For others, it could be an amazing thing. And depending on the tool and how you want to use it, it might be a right fit for you. The other kind is called an IUL, an Indexed Universal Life Policy or Universal Life Policy. They've got some other terminologies. Those are kind of a hybrid of the two, where they use indexes or other vehicles to determine how successful and how an insurance policy grows, and these can be for a specific term. You can have a decreasing death benefit on these with as far as say that you buy something for mortgage protection, and so I bought a house for $300,000 and I want this to pay off the house if I were to pass away. Not a problem. You get an insurance policy for this. You pay the premium each month on that, and the death benefit will get smaller and smaller and smaller over time, so it matches your mortgage amount that you owe. And those are generally fairly affordable because the death benefit's getting smaller. It's got a specific purpose. So this is an example of what I'm talking about when I say maybe. Should you have one of these? I had a client of mine that helped retire a few years ago, and he came to me and he's like, Ryan, I don't think I can afford to retire. And I'm like, well, why not? And he says, I just don't have enough money. Well, let's look at your budget. And so I was sitting there looking at his budget, and I said, hey, what's this $500 a month that you're paying in life insurance? He said, oh, that's a policy I bought 20 years ago that to take care of my income if I were to die and to pay off the house. I was like, fantastic. That's very responsible of you. Now, I've got 2 or 3 questions with this, and please, I don't want to be crass when I say this for this particular client. And it says, is your home paid off? And he's like, yeah, I paid it off 5 years ago. I was like, congratulations, that's a big deal. And I said, and I don't want to bring up old wounds, but didn't you tell me your wife passed away? He said, yeah, she passed away last year. And I said, so what's the purpose of this policy? It was for income replacement for your spouse. She's gone and you've paid your home off. And he's like, oh yeah. And I said, the next thing is like, and I said, $500 for 20 years, that's a lot of money. That's a fairly expensive policy. Let's figure out what you've got. And as we got into it, it turns out he had a whole life insurance policy that had a cash value of over $200,000 he'd been paying on for this period of time. And I said, well, there we go. So we took that cash value, we rolled it into a couple of different other solutions, and so that we put one into an annuity with income, and then we did another one that had a smaller death benefit to take care of his final expenses and give some legacy for his children. And in the process of that, we removed a $500 a month payment for him. So this life insurance vehicle gave him income, and it gave him a death benefit. So for him, that was a great solution. Now, if I had somebody who was 40 years old and he came to me and said, I've got this life insurance policy, should I get rid of it or what do I need to do with it? My answer would have been completely different because the scenario was different. Life insurance is a tool. And like all tools, we need to make sure that it's solving a specific problem and it has a specific function. That one of the things about it is that if you talk to a hammer, everything looks like a nail. If you talk to a life insurance salesman, everything you have out there, the solution is life insurance. If you talk to somebody who specializes in annuities, the solution to everything's an annuity. If you talk to somebody who only deals with investments, the solution's investments. So my recommendation to you is that all of these things are good. All of these things are fine in the right scenario. Now, let's go ahead and take a look at some of the things that life insurance can do. If you are looking to just have a mortgage protection, and I listed that out, should you have life insurance in retirement? Now, I'm specifically talking about folks that are, say, on Medicare, they're on Social Security, they're no longer working. Do I need to have life insurance? Well, let's go ahead and look at that. So, is your mortgage paid off? And is there a large age gap between you and your spouse? Having some coverage to take care of the mortgage, because understanding what's going to happen to your income when one of you pass away is a huge deal. And anybody who just looks at your life insurance only and tries to answer this question, again, I don't think they're doing you a service. That you need to look at things holistically. You need to look at things all the way across the board. What kind of income do you have? What kind of debt service do you have? What is your health like? Your spouse's health like? What kind of an age gap is there? Are you both retired? Do you have to take care of a child, a parent, a grandchild? These types of questions. And to sit down and the agent who's working with you should do a full and complete customer intake form to find out exactly what's going on in your life, to make sure that they're making a recommendation that's appropriate for you and they're not just slinging product. That's one of my biggest pet peeves, is people that are out there just trying to make a sale and not concerned about the impact they're going to have on people's lives. So the older you get, quite often it's much more difficult to get, say, a term life insurance policy. And that's just a large policy for a specific amount of time. So if you're 70 years old, you're going to be hard pressed to find one that's going to be really beneficial for you. But what if you just want to cover your final expenses? Well, that is a great one. And this is something that I recommend for everybody. Well, for not everybody, but most people. The reason being is that final expense is a big deal. And quite often I'll meet with people and they'll say, hey, no, I've got a couple $100,000 in the bank. There's plenty of money. The kids can have access to it. That's great. But let me ask you this, is what happens if your financial situation changes between now and then? 70% of folks out there are going to need long-term care. What if you're one of those 70%? What if and all of a sudden that money that's here now while you're healthy is pretty much gone and spent? Now what do we go through and do? So what I like to go through and recommend is either a single premium whole life policy or a final expense policy of some kind where you've got that taken care of. And there's a lot of organizations and companies out there that can help you with that. Another thing that we want to look at is what I just mentioned, and that's long-term care. That there are a lot of long-term care solutions out there. And it used to be that you could buy a long-term care policy and there's lots of companies and you just paid on it and away you went. Now there's only about 6 or 7 nationwide that are really worth anything to offer long-term care policies. Life insurance is a great way to take care of this. You pay a monthly premium. That premium is set. It doesn't change. That's a nice thing here, especially if you set the policy up correctly. And then you've got a death benefit. Now, the thing about this kind of a solution is 70% of us out there need long-term care, or going to. And if you're one of the 30 that doesn't, I would not want to pay into a solution that my family doesn't receive any benefit from. So if I use the life insurance for the long-term care solution and I don't need it, they're going to still receive a death benefit on the end. Versus if I do need it, a lot of these policies will give you access to a portion of the death benefit in advance if you can't perform 2 of the 6 activities of daily living, or in case you're institutionalized. So there are some options there where you can use life insurance to take care of long-term care. That's another great one. What about taxes? What about trying to pass on an estate? What about trying to pass on a legacy? I went through and I spoke to somebody here the other day that they are selling the family farm. Her husband passed away recently, and so she's got this farm worth about $6 million. And she's like, all right, so I'm going to take this, and she's going to sell it. There's going to be some tax ramifications from that, but how do I give it to my kids? Well, how would you like to give them a lot more tax-free? And so she's like, what do you mean? I said, well, you've got 4 or 5 kids. What if we were to take a couple of $1 million of that and we buy a life insurance policy on you for each of your kids? You're healthy. We do a single premium on that. We take $2 million. We put $500,000 premium in each one of these. You give your kids a significant death benefit. But here's the cool part. You're the owner of these policies. So if you need to have access to them in advance for long-term care for whatever reason, you could do that as well. So my point to all of this is, depending upon your situation, life insurance might be a good fit for you. Some things that it's a great solution for: long-term care. We absolutely need to look at that. Passing on a legacy, your final expenses. These are things that everybody's going to have to deal with, and life insurance is a great solution for that. And I'd recommend sitting down with somebody who specializes in it to find the appropriate solution for you. Now, here at Retirement Fundamentals, that is what we do. And so if you've got questions on that, give us a call. We can have send one of our advisors out to you locally, or if you would like to just meet with one of us online here, we can go ahead and help you with that. But the idea here is that don't just assume it's going to be fine. Hope is not a plan. All right? Hope is wonderful, but it's not a retirement strategy. Thank you so much for joining us today. I really, truly appreciate it. If you've, for anybody else out there that's got questions, please, we love to answer questions. Go ahead and put them in the comments, send us an email, and we will try to answer it in future episodes. As always, don't forget to like and subscribe, and we'll talk to you in the future.